It's Thursday and you're watching FreightWaves Now. I'm your host Anthony Smith, and coming up, Mike Baudendistel is going to give us a Rail Intermodal update. But first, we're going to go to Zach Strickland with a carrier update brought to you by PowerFleet. Stay tuned.
Hey there, and welcome to your Thursday Carrier Update presented by PowerFleet. I'm Zach Strickland, and today we're going to continue to see some of these volumes year over year, get a good comparison, see some of these volumes really, they're showing a lot of strength year over year, even over the last 2 years. So I've got our outbound tender volume index for the United States pulled up here in the blue. That's our current year, 2020. You can see that green 91.91 down over there. That is what we're seeing this year, which again, much stronger than last year down there in the yellow by about almost 10% higher than the yellow line down there. And then 2018 is represented in the green right here, and that is 87.67. So again, about 4 to 5% above what was considered one of the strongest freight years in recent times. So we're seeing some definite recovery volumes here, but not all volumes are created equal, as we all know, so it doesn't necessarily mean that it is spread evenly throughout the country. Let's take a look and see what type of freight is moving. What are we seeing different year over year in terms of length of haul? So I've got our long haul, short haul, mid haul, tweener haul, all the lengths of haul displayed here on the map, showing, or on the chart, showing exactly year over year change in terms of what type of freight is moving. The long haul freight, 25% up year over year. So a lot of long haul volumes compared to this time last year. 19.2% on the mid haul volume. So mid haul and long haul have really been outperforming last year by a good stretch. You can see down here that short haul and local kind of dragging. But if you look at the mid haul and short haul volumes right there, and the purple line and the orange line, they both took a noted increase up here over the last couple days. Basically saying that some of these short haul and mid haul volumes are really taking off this week compared to last week, where we saw a couple of notches in the tweener and long haul freight. So what this is indicating to me is the fact that we are seeing a switch from that long haul replenishment volume into that city freight that we see normally supplying a lot of the store freight, a lot of the local warehouses out there where they're going to have that endpoint distribution. So here's our average length of haul for the United States. This really sums it up nicely. Average length of haul dropping tremendously from over 620 miles to 601 miles on average. Again, a big notable change this week in terms of length of haul, basically illustrating what I was just showing you before in a little bit more summarized fashion. So looking at our outbound tender market share tree map right here, week over week change. Let's see where some of these volumes are changing. Where are they originating from? Looking at this map, you're going to see anything in green showing a week over week change highlighted in the percentage there. Anything in a red, week over week decline highlighted in the percentage. So Denver 3.3% down, Milwaukee losing some ground there, Salt Lake City dropping off pretty rapidly here at 11.6%. But there's a couple of markets that really stick out to me in terms of where to pay attention. We've got Atlanta, the largest market in the United States in terms of overall volumes, 11.8% up week over week in terms of market share. So growing rapidly out of Atlanta. That southeastern freight volume is turning up. We talked about that a little bit yesterday. Tender rejection rates not climbing rapidly, but eventually you would have to anticipate that they would eventually follow suit. The one market that really sticks out to me, Detroit, Michigan. Detroit, Michigan, of course, the automotive capital of the United States, 73% up in terms of market share week over week. I think we all know what that probably indicates. The automotive plants, of course, returning to work and starting to ramp up their function. Again, a lot of production coming out of Detroit and that market up there. So again, one of the only markets in the United States that you'll see our outbound tender volume index not show a trough right now throughout this week due to the 7-day moving average. They've really ramped up their production in Detroit. Has it impacted tender rejection rates? Not so much. 2.39% on the outbound tender rejection index. Not having a lot of trouble. But again, if we break it down by length of haul over here, you can see a lot of that freight is that local freight. The city outbound tender volume showing one of the biggest increases up. Not a lot of long haul freight coming out of the Detroit market, so a lot of regional short haul freight. So pay attention up in Detroit. And that'll do it for today's Carrier Update.
The comprehensive logistics offerings from PowerFleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with PowerFleet.
Welcome to your Rail Intermodal Update. I'm here with Mike Baudendistel. Mike, what's the latest?
The latest is in rail traffic, we're finally starting to see some degree of improvement in the rail traffic. You see, this is the data that just came out from AAR this week for week 21, and we're seeing some sequential improvement. Still, year over year, rail carloads down 26%. It does feel better than the 28 or 30% that we had been seeing earlier, but still, the industrial economy has a long way to go. A few of the categories are off of their lows, which is an improvement. If we look here, this is the week over week change, and some of the things that stand out to me are one of the big drivers of that week over week improvement is grain. So not something that's very cyclical, but does represent a lot of rail traffic, and really represents the fact that some shippers were maybe shut down, coming back online, and then closer to you, motor vehicles up about 70%. So Zach was just talking about Detroit. Certainly, this was the first week that we had seen any of that in the rail traffic. So instead of being down, 90% down, more like 70%. You sort of see this is a tale of two different, commodities that move on the railroads. Closer to you, motor vehicles. You see that it's coming up from an extremely low level where there was almost nothing, moving. And then here, chemicals, something that's a little bit more, cyclical. I mean, chemicals go into so many things, including, motor vehicles, just a lot of the basic, components to build a lot of both consumer durable and non-durable goods. A lot is exported also. Here, this looks like similar to what about 17 or 18 of the categories that the AAR reports on look like. They've come down. There's very little improvement. It's just sort of this this new level at a much lower range. If we shift over to intermodal, really it's a tale of two markets in intermodal. In blue, you see domestic intermodal, and that's kind of has this Nike swoosh-shaped recovery before the Memorial Day drop. In green is international volumes. Those are the ones in the intact 40-foot containers, and those really haven't seen any improvement. So, here the blue looks more similar to what we were seeing on OTVI, not quite that degree of improvement, and it'll be interesting to see if, what Zach was just talking about with the average length of haul coming down, if we're going to see that as a negative sign for intermodal going forward. Intermodal competes much more effectively in the longer, length of haul, anchored by the big cities.
One of the things you mentioned, some commodities are faring better than others. We did see a nice little blip up thanks to some, you said, manufacturing activity from motor vehicles. Does there seem to be a lot of headwinds coming from the industrial sector overall?
There does, definitely. I mean, things like, metals, are really sort of, it goes into a lot of different, products in the industrial economy. And that's one that, I watch as far as, looking at overall rail traffic. And that's just been another category that's sort of come down and sort of stayed down. Really hasn't seen a lot of improvement. So the improvement that we've seen in rail traffic has been sort of certain niches. It really hasn't been all that broad.
And it sounds like some of these have ties to the consumer, more so consumer facing than others.
Yeah, I would say the one that's the biggest consumer facing is what we have on the chart here, intermodal. I mean, what goes in there is a lot of just consumer goods, clothing, some food that doesn't need to be refrigerated, some cheap furniture, those type of things. And, there you've seen some improvement, but still not back to where we have, not to the same degree we've seen with OTVI. Maybe that's because maybe the more of the time sensitive or refrigerated products tend to be a little bit stronger right now.
Excellent, Mike. Thank you so much. Insightful as always. We appreciate it. And thank you so much. That's going to do for this Rail Intermodal Update. And that's also going to do for this episode of FreightWaves Now. But the fun doesn't stop here. We're always streaming around the clock. So check out our FreightWaves app on all your favorite streaming platforms, including Apple TV. Thank you so much for tuning in, and we'll see you on the next episode.